Welcome to the HCM TV video blog. I'm Chuck Schaefer, and the purpose of this video blog post is to further explore the HCM market news of Workday's initial public offering. After Workday co-founder Dave Duffield's unsuccessful skirmish with Oracle in 2005 over the hostile takeover of PeopleSoft, many pundits within the industry wondered if Duffield would go it again and rebuild another application, and if so, whether the HR industry would take to it the same way that they embraced his former PeopleSoft. Now 7 years after Duffield introduced the world to Workday, few were surprised when Workday filed its S-1 paperwork to pursue an IPO. Still, there weren't many within the analyst community that could have predicted Workday would raise nearly $750 million and would have a valuation at over 4.5 times as much, especially after the recent high-profile IP results from Facebook, Zynga, and some others. However, even though Workday pulled off one of the most successful IPOs of the 2012 financial cycle, perhaps the even bigger story surrounding Workday's feat is the mainstream acceptance of the cloud and the software as a service technology model as a whole. In fact, as Eloqua's CEO Joe Payne puts it, this is simply another validation of the SaaS model, which is already dominating the competition. Be that as it may, there are still a number of questions that we're getting from business leaders and prospective buyers alike about this latest Workday news. So I'm going to use this post to address a few of those most frequently asked questions. Starting with, what does Workday plan to do next? With $637 million raised from selling 14% of its Class A shares, many within the analyst, customer, and investor communities have been left wondering, what exactly does Workday plan on doing with all that new money? Some have insinuated that the company won't be spending any on acquisitions, while others have made the bold claims that Workday is trying to build out the world's next cloud-based ERP suite. With regards to acquisitions, according to IDC's Lisa Rowan, no acquisitions of note are in the company's sights short term. However, Workday has already publicly stated that its regulatory filings have built in the option for using money for acquisitions. And experts versed within the M&A landscape find it difficult to conceive that Workday won't be leveraging that option with at least some of that newfound cash to shore up some of its applications deficiencies. Granted, the lion's share has been earmarked for research and development as well as international expansion, but acquisitions are almost invariably on the table, regardless of the company's public statements or pundits' opinions. With regards to the larger intentions of a cloud-based ERP suite, I think it's important to note that very few indications have been given that this strategy is one that Workday will fully embrace. In fact, while there are media articles that might belly these claims, the company's latest release, Workday 16, is not a cloud-based ERP offering. Unfortunately, far too many analysts and customers within the HR, payroll, and HCM communities interchange the terms for financials and ERP, a particularly pressing problem for those companies that actually have ERP requirements. Workday's financial suite really only makes up 1/5 of an ERP suite, and there's no clear suggestion that the company will pursue other ERP tenets, which include CRM, manufacturing, and supply chain management. And in recent interviews with Workday CTO Mark Peek, emphasis was only given to the core ERP area of financials. Not only that, but given the company's increasingly tethered relationship to Salesforce.com, entry into the customer relationship management software market is almost assuredly not going to happen. The next question that we hear is whether Workday is raising money to plug holes or fill voids in their product offering. And as mentioned earlier, Workday sees the financial side of their offering right now as the area that needs the most significant amount of work. In fact, according to the company co-founder Anil Brusi, more work needs to be done to bring the financial suite to parity with legacy systems. However, with Oracle's purchase of Taleo, SAP's acquisition of SuccessFactors, and IBM's late bid for Connexa, The fact of the matter is that once rationalization is wrapped up for these companies, Workday's talent management capabilities will be competitively lagging. Granted, new functionalities are being released with each successive update, now on Workday 16, but the breadth and depth of Workday talent management is not at parity with Oracle Taleo or SAP SuccessFactors. I expect to see more investment by Workday in talent management. Logically, this then leads us to the next question that business leaders want to know about, which is what will this do for the HCM market? Well, regardless of how much money Workday raises or how much additional R&D they're able to absorb with these new funds, the fact of the matter is that they have a long way to go before they can even touch the market shares that SAP and Oracle respectively have in the HR software market. After all, currently Oracle commands 12.4% of the market, SAP has 17.4%, and Workday trails behind at a respectable but minimal 3.5%. That said, Workday is closing the gap little by little every day, even doubling first quarter revenues in 2012 to $119 million over the same period last year. So clearly, the company is picking up speed. Perhaps more telling, though, is how interested prospective buyers are in Workday. As Towers Watson's Tom Keebler puts it, this IPO reinforces Workday's place on the short list of prospective vendors that major enterprises should consider when they're actively searching for a new HR management system. Indeed, Cedar Crestron's latest 2012-2013 HR system survey pegged a growth rate of 300% plus for Workday over the next year. Regardless of those numbers, though, PeopleSoft is still the most adopted HRMS solution, and according to market research, will likely only lose 1% adoption over the next 12 months, some of which to Oracle's new Fusion HCM solution. And given that Workday does not offer customers choice with regards to on-premise or hybrid deployments, Workday's HCM market growth is more limited than competitors such as Infor, Oracle, and SAP. Finally, I think it's important that prospective Workday customers, and investors for that matter, understand that Workday has become one of the most talked about HR software applications in the industry because of its cloud technology offerings rather than its inherent HCM capabilities. And the incredible showing that the company was able to pull off for their IPO is simply an indicator of how the market is reacting to that technology. That said, with over 350 customers added to its client list since the company's inception, the largest of which, HP, now tops 300,000 employees, Workday has clearly pulled off one of the most enviable hat tricks that can be achieved in this industry. Organizations that would not have given the cloud a second look just a few years ago are now considering migration and full-scale rip and replace, thanks in no small part to Workday. Yes, their interface is slick and more compelling than most of its competitors. And yes, the multi-tenant database architecture can provide efficiencies that cannot be gained from on-premises deployments. But for companies considering the full-scale replacement of mission-critical legacy systems, Workday still has much to prove in competing favorably with the market share leaders. And the company's new funding further fuels that opportunity. And with that, I'll leave this video blog and Workday IPO synopsis complete.